We begin with tariff turmoil, new developments every day adding to confusion. Thank you for staying with us. We're so glad to have you. I'm Simon Shayket.
And I'm Glenda Lewis. We saw the stock market tank today, and we've been hearing from so many of you about your worries for Wall Street. So joining us live right now to help us sort it all out is financial expert Paul Fenner, the founder and president of Tamma Capital. Paul, thank you for being with us today.
Hi, Glenda. Good to see you again.
Yeah, you too. So obviously a lot of concerns surrounding what we're seeing on Wall Street. Many people living here in Metro Detroit wondering, what are the money moves I should be making? Do you have any advice for us?
Yeah, I think the first thing to do in a situation like today is address the emotional side of what's taking place. It's okay to be scared. I've talked to many families today addressing that very issue right off the get-go about how scared and worried they are. And that's a natural emotional response to a day where you see the stock market fall 4, 5, 6%. But as far as tactical moves that should be made, we need to remember that the stock market, individual equities, mutual funds, ETFs are long-term investment opportunities. And when I say long-term, I'm talking 10, 15 years. So you want to make sure, first and foremost, that those assets are aligned to the plan or the objectives that you want to achieve. So if you have a 20, 25-year time horizon before you retire, then the stock market is still the best opportunity for you to see growth. But if you're 2, 3 years away from retirement, being 100%, 90%, 80% in the stock market is probably not the right asset allocation you want to be in.
So for those of us with 401ks, some are wondering, should we be tinkering with our portfolio? Should we be looking at investing in more bonds versus stocks? And what would be the advantage of that?
Yeah, I think, again, it goes back to what your long-term plan is. Now, especially with retirement, that's a long-term horizon. So you need to align that risk profile, that asset allocation, how aggressive you want to be versus how defensive you should be. So making changes on a day like today, I would highly not advise. The time to make those moves are when you're aligning your portfolio to your plan. So making tweaks because the market is down 4 or 5% isn't the right call, I don't think. And usually most people contributing to a 401k, you're putting money in every 2 weeks, every week, every month, how often you get paid. So you're taking advantage of something called dollar cost averaging, where when the stock market is high, you're buying a little less. When the stock market is low, you're buying a little bit more. So over time, you're averaging into the market and not buying at the absolute highs or the absolute lows.
So strategy is key. Hearing from an expert could be helpful in this situation like yourself. Where do you see the market heading in the next 6 to 12 months? Do you see recession?
Well, if I had that answer, Glenda, you probably wouldn't be talking to me. But obviously, there's a lot of uncertainty, and that's what the market hates, is uncertainty around the tariffs and where do we go. And I don't think we're going to get any clarity around that uncertainty anytime soon. And even if the administration decided to take back some of the tariffs that they've already put on, it doesn't allow companies to make long-term 6, 12, 18-month decisions on where they're going to manufacture their products. It's not like you can take a plant that's currently based in China and move it to Michigan overnight. Those take years to develop. So I think the uncertainty is going to be with us for a while, and it's going to be a choppy market. You're going to see days where we have a whipsaw where we're back up 1, 2, 3%, or another day where we could be down 3 or 4%. And tomorrow there could be additional volatility because we have an important jobs number coming out. So even though today was a really rough day, tomorrow, who knows what could happen with the jobs number.
Yeah, wow. Well, a lot of wait and see. I appreciate you being with us, Paul. Thank you so much.
No problem. Always good to be with you guys.
All right, same here.